Okay, well, fellow traders, we are now looking at a company called Redhat. A few days ago, I think beginning of the week or last week, let me check first. Yeah, about beginning of the week, this company, IBM, had announced to the whole world that this company, they're buying over this company at a high premium of $190. Before, before the announcement of this buy to take this Red Hat private at $190, Red Hat is trading at $115 level, if you can see from here. So now, there are some questions about people want to buy these shares and want to hold it to the end. My advice to you, ladies and gentlemen, this one is not for retail levels to trade. The risk premium, do not justify the risk. Okay, what I mean by risk premium? Okay, give me a minute. Okay, let me draw a knife for you first. Currently now at the 115 level, trading at the 115 level, actually was a 1 year low. Okay, one year low. Then you shoot up. Announcement come out. It shoot up all the way to high of 175, retrace back to 166. Now trading at approximately 1758. Okay, let me explain what's the problem now. First, IBM is buying this company at $190. Okay, this company, nothing wrong with this company, but unfortunately, okay, the fact the market is trading it now at 171.57, after approximately 4 days after announcement. Market takeover price is at 190. That means market give us this what we call Thomas 190 sure make money one. IBM sure take it one. Sure able to buy 190. I guarantee. I buy now. I'll take profit by December. So I have what $19, $18 and 45 cents, 45 cents profit for Christmas. Not true. Let me explain. I let you understand I can't repeat the word. Market is fair. Market is great, right? I tell people, see market, trade market. The price tell you everything. The fact that the market give you almost a $19 discount is what we call a danger premium discount. That means that there's a there's a possibility, good possibility. I won't say majority possibility, but it is a but minority, but good possibility that this merger acquisition, no, acquisition were not able to follow through. Okay? One, IBM is poor. That means that in order to buy this company at $190, IBM they need to borrow a few multiple take out more debt. That's one thing. Secondly, there is what I call government regulatory authorities. The American government must give approval. American government agencies must give approval. I read reports that the Chinese government also must give approval and things not. Second, the most important thing now, ladies and gentlemen, before you're too happy, is one thing you need to know. How long do you think this acquisition to take to complete? Greg, don't comment please. Anybody can give how long? 1 month, 2 months, by Christmas, or after Chinese New Year, or after the New Year? Anybody give a comment? Guess? Anybody will give comments? Okay, Greg, you have 6 months. Good. Greg, what's the latest numbers? You have a vested interest because April you're getting a few hundred shares from them. Mm-hmm. They are looking to close it at second half of 2019. Second half, the way is up to or more. Okay? Okay? If the Chinese government said, no, you got software in China, I forbid it. No. And that's the reason why you is not really worth the time. you have a 11 now currently now at 19%, about 12-13% return over underlying risk. The market price is $171 approximately there. Then your profitability is $19. So technically speaking, you're taking a profit return over risk, share risk in this case, is 11%. Thomas, I use options. I can make more money. Fair enough. Before we look at option trade, any questions about this trade? Sorry, not trade. Any other question about this potential, this takeover? Sorry, merger, the acquisition. The problem existing is this market. The underlying price you see here, the share price is one thing. Options market tell us a better picture. Thomas, but the announced right. So end of December, end of this month, take over already. Look at the option premium. See lah, 170 look carefully. 170 look carefully 170 here. And the money put is what? Zero. Us is 210. That means what? Everybody is thinking is going through. At this point in time, it won't drop. Okay, therefore nobody to buy. Then the Thomas how the 210, 125, or 185 come from where? This is what I call market makers price, also called designated liquidity providers or makers. Let's say now we focus on the fact second half, correct? So let's look at June 2019. The price. What's the markup here? The markup is $10. $10, 750. Okay, make it $9 mid price. Make it make it $9 mid price to be fair So what is 184? Okay, listen to me May not be enough. So you need to go to where? You need to go January 2020 just to confirm. Look at the price. $12, 13, make it average 13. Well, if you're going to buy a straight call, okay, can do it now. Not justifiable. You understand me now? Okay? You see not just straight call. Of course, those people who got more sizable account, they got strategies to trade this company. Okay? People who got a budget, let me check first. Anybody want to trade this company, you can do what we call diagonals or calendars. Straight call, straight puts, don't be a fool. You understand what I say? Okay, don't be a fool. The fact, look carefully, at 442 days away, look at the money put, how much? 10, the ask price is 850 there. The fact that is ask price is 8.50 cents, this number, but this number is now price there. Now is what's the now price? The market is buying and selling there. Remember, people want to sell expensive, buy cheap. Sell 11, buy 850. Buy 850. So now this is market consensus there. Now it's based on what we call positive sentiments that they take together. The moment any news come out that this company may got into problems or some regulatory difficulties or IBM is not able to borrow enough money or the credit so-called or affect IBM business model, the credibility or what the credit rating, etc. This one option pricing will definitely move. Remember, options pricing bid ask price will move even the underlying do not move. Any questions? Anybody interested to do this trade? Stand by. Do not buy shares. Stand by at least $5,000, about $4,000 to $5,000 worth of risk capital. Anybody interested to do this trade? Anybody want to do this trade? If do me a favor, can you tap no if you're not interested? because I need to know whether the internet, the so-called the internet streaming Wi-Fi webinar service is still there. This is a diagonal. Let me show it to you. I think you can do it if you really want to, because Western interest. Difficulty, have look right here. Very difficult to do now. See lah. You see 29 days away At the money call look carefully look at price. Bid price 70 cents. 30 days away Ask price is 260, 265. Thomas, why like that? The spread is 250 must be liquid Spread do not reflect market liquidity. Spread just reflect market interest in the underlying. Okay, now, why is like that? It's because, okay, the buyers and the sellers have disparity. That means that there's not many people buying and selling this one. This for you, Greg, is for you only or people who got 4,000, 5,000 to trade. Now, this is a calendar. What is a calendar? Calendar is basically January 2017. It's basically selling a short-term call for credit, buying buy a much longer term for a debit. Okay? Currently to this trade now will cost you $1,118. You notice Thomas, why like that? No break-even price, no maximum profit, no maximum loss. It's because diagonals and calendars is impossible to count. In fact, most software systems retail are not able to calculate this one, because a calendar by itself can be a multi-time frame trade. We are selling January, we are selling December 21st December 2018, buying January 17, 2020. Thomas, why I cannot sell next Friday? I will sell next Friday, I collect a lot of money. Stop. Look carefully. What is the price here? It's what? Bid 0. Ask is 50. I will sell at the money 17525. 35 cents only. No, 180. Yeah. 180 is what people, 175, 180 is what people sell to you. The buyers are prepared to only buy 35 cents only. So there's no money to collect. The only place got money to collect now, which I can find now. See, like here, 175 here. What's the bid price? 36 days. Bid price is 0 leh. Ask price is 295 leh. The only place we can find some liquidity is Monday options. It's so liquid now. It's not liquid now because there's no interest. It's liquid now because IBM said that this is taking over the company at 190. So the fluctuation premium is what we call danger premium. It's not going to move, only to directionality. Okay? Any questions? At 50 days, we can look at 50 days level, 21st December, got some liquid got reasonable, 110 and 125, reasonable. We cannot be go and selling, we cannot be go and selling 0, bid price 0 and selling 340, it's impossible to get filled. Any questions so far? Any questions? For you, Gary, you can do it. People who got, let's say, got $20,000-$30,000 account size, you can do this trade. But the problem, this trade, like I say, 6 months, 9 months, most probably, the fact I asked you to buy January 2020 options, show that means that I already projected it's going to be that long, that far away. They got liquidity here. Look carefully. Long term liquidity. $12. $12 bid. Ask is 12.70 leh. It's reasonable leh. 70 cents is very reasonable. Why? 442 days away leh. Why is not reasonable? This is not reasonable. I should tell you now. Let's take 30th November. This is not reasonable. 70 cents. So this calendar trades, if you're selling it, you have to pay what $1,100, $1,118. Any questions? And Thomas, December expired. What happened? If December expired, most probably we sell February or March. December expired. December, correct? We sell either February or March options. I don't think January options they got 30 days got premium now. Most probably we sell monthly options now. Okay, 30 days. If 30 days have premium, we sell 60-day cycles. No. Sorry, the word cease to exist is wrong. I repeat again. If the thing cease to exist, it's wrong word to tell. As the time pass, system get rid the option when as the time pass get as a procedure to confirm the acquisition, we get more and more into what I call into nearer to completion. The premium, the underlying shares premium, the price will increase to get closer to 180 to the 190 level. Okay, if you hold a 175 options, okay, and the company will take it over at 190, okay, you know such thing as your options to buy the shares at 175 is still valid until January 2020. It do not cease to exist. So the CBOE, Chicago Board of Option Exchange, and OCC Option Clearing Corporation will create a settlement price to settle all the options that is in the money. Okay? Best not to get into that stage. It's best to take profit when near to completion cycle. Remember the rule. In the event of expiring 1 cent or more in the money, okay, whether long leg or long call or long options or short options, okay, long options or short options, 1 cent in the money, automatically by right the broker exercise you. Okay, so you cannot say Thomas, in the money by $10, the option become fail to exist because it's take over now. It is not true. The company must make, the market must make good to you. The option do not exist. The option do not, the only the option do not exist. Right, man, now, if the company technically deletes or go bankrupt, even that, if your options is in the money, the options clearing corporation and the CBOE, etc., Chicago Board Option Exchange will do the settlement, will find a way to settle everything nice one. Okay? No. Hello, my friend. Why, if you buy a 175 call, how can you exercise at 190? No. You buy exercise at 190, there's no money to make. You buy a 175 calendar means that you have to buy the Redhat shares at 175. So, okay, now if your right is 175, if your market take over at 200, then technically speaking, and legally speaking, you should have a difference of $25 profit if you take over at 200. Any questions besides this one? Pavin, anyone? By the way, this is a coaching level trading strategy. And Regina, please don't do this trade. Take too long for you to make money. Any more questions? Okay, Redhat finish.